Timmy!
No, it's Jimmy. Blah, blah, blah. Good evening, ladies and gentlemen. I am Jimmy James. You're watching Catch It Live First. Not the normal stream we would have for you tonight. No sport. So we are going to do a video about the current market, the moves in gold, in silver. And believe it or not, I'm not a YouTuber. I've only got 450 subscribers. So hopefully that's going to change. And if we can get enough subscribers, the Polish Premier League have said we can live stream the matches. They will do a collaboration with us. But my day job is Forex and commodities trader. So I thought, why not do a quick video about the markets and what's been going on and some of the comments that I've seen on social media. So it's let's have a look at that. Anybody watching in Poland, by the way, dobry wieczór, niemowy po polski, angielski, dziękuję bardzo. Wisła Kraków, jazda, tak. We'll be back with Wisła on Saturday evening. We've got a friendly game. But tonight we're going to concentrate on the markets. You might find this a little bit funny. You might find it educational. You might just want to listen to somebody drone on like me, Jimmy James, while you fall asleep. Let's start off with, behind me, you can see the market's just closed now at 10 o'clock. So spot silver's closed at 48.91 to buy. So it's come down from the highs of the day. But yeah, let's get on with these comments that I've seen regarding the markets. So, like I said, I normally trade Forex and commodity markets. You'll call it Forex pairs or crosses, whatever you want to call it, but I call it Forex pairs, to be honest. But I wanted to start by expelling some of the myths. And if you're a trader or you know a lot about gold and silver and commodities, then I offer you my apologies because I'm going to be teaching you how to suck eggs. But I just see so many comments on social media that in theory they do make sense. So I understand why somebody with a vague interest or a layman would think it is easy to make money. But in the real world, it shows exactly why they're probably going to get eaten alive by even a half decent trader. So my advice would be stay out of the market. I'm not saying stay out of the market and don't ever buy a commodity, a gold coin if you've got some money, or silver if you've got some money. You know, do it that way, do it the safe way. But trying to make money in the commodity and Forex markets, especially if you're using leverage, it's not easy and you need to be careful. So it's as much of a warning as it is highlighting some of the myths that are out there. I've just got to get one of my lozenges. I think this could be longer than I thought, actually. But stick with it, or if not, I wish you all the best in your trading and fingers crossed for the future with your gold and silver and your Forex trades. I genuinely do wish you all the best. It's an interesting time. But like I said, I see the comments on social media, and yeah, a half-decent trader would spot mistakes a mile off. And to be honest, the algorithms are probably getting there before any half-decent trader anyway. But yeah, if you are thinking of trading, be real careful. And I hear so many people who retail traders who bought into Nvidia, and suddenly they start giving advice to strangers. One guy was doing it in the hairdressers, well, earlier this year, and he thought he was the next Paul Tudor Jones or Jeffrey Gundlach or something like that, the Bond King. And so my ears pricked up. I thought, I wonder who he works for and that. And he said, "Oh no, I bought some Nvidia." And the next thing he's giving advice on to this poor I'm not sure if he was Turkish or not, but he was giving him all this trading advice, and I thought, blimey, I hope he doesn't understand you. But yeah, so it is one of them. Now, and don't get me wrong, I'm no financial whiz kid, but I know how to get by and profit, which honestly, over the long term, probably puts me in the minority. I've seen people trade well for a few months, even for a year, but eventually it all goes wrong. And it's thanks to the sharks out there. That's where it all goes to. And you hear the excuse from them, you know, I made a mistake. I pressed the wrong button. Well, close it out. I think it's just an excuse that they've either rushed into it or maybe they have made a mistake, but it's got to be a hell of a mistake. You know, I can't think of a mistake that you get into where you can't close it out with, yeah, you're going to make a loss. But there's always a way you can get out of a fat finger mistake. So I think there's more to it than that, and maybe it's ego that won't let them say, yeah, I cocked up, or it's not for me. But and trust me, if there's a mistake out there in the trading world, I've probably made it, especially in the early days. But what I did do was try and learn the trade, keeping things small, where you know find out exactly what you're doing. It's like I say, it is a jungle out there, and somebody is always looking to take your lunch. I mean, the best one that I ever did, I worked for almost 3 weeks solid with very little sleep, and I was up around 130k, and fatigue got the better of me. But instead of closing out, you know, to recover physically, take a few days off, you know, get some sleep, get healthy again, because it does affect your health, that is for sure. I didn't, and I stayed in the market, and then I went ultra cautious because I knew I was fatigued, and that sent me against my better instinct and better judgment. And within 7 hours, I'd lost I'd given back about 92,000 in 7 hours. Still a good profit at the end of the month, but I genuinely now know what, in trading terms, what a truly spiritual experience is. And I think it was Rick Rule who said it. Some of the losses, yeah, it's a truly spiritual experience. It's not pleasant, I can tell you, but, you know, that's the game. So if you can deal with that, best of luck to you. The trading game could be for you. So here's the first myth. If I can sell spot silver now higher than I can buy it for in December, or in the December contract, it's a guaranteed profit. And most people would sort of think, yeah. Of course, the plan is always to buy at a lower price than you sell at. And the fundamentals of the idea, it looks like a perfect setup for a nailed-on profit. You think about it, you can sell spot silver now, you know, the metal itself or the spot equivalent for a certain price, and you see that the December futures contract is trading lower than that spot price. Like we've got, well, it might not be now, but a couple of hours ago, that's what the setup was, and that setup's called backwardation. If the futures is lower than the spot, that's backwardation. If it's the other way around, so the future is higher than spot, that's called a contango. But in our case, this comment, spot price was higher than the futures price. Silver is in backwardation. So that's a guaranteed profit, yeah? Well, no. And here's why. In theory, you might think you could, and this would be the setup, I'm assuming, what the guy or gal was thinking. They were going to sell the physical silver now, or they'd be short in spot, as they most likely wouldn't own the silver to sell initially. But by the by, or you'd be what's called naked shorting, basically selling something that you don't own. But let's go with the plan. So then they buy the December futures contract, so you'd lock it in to receive the silver later at a cheaper price, and you'd pocket the difference. Then you'd deliver into the contract or close both legs out for a profit. Yeah, that would work, wouldn't it? Well, actually, no, it wouldn't. In reality, there's several factors that stop this from being a risk-free venture or easily exploitable. And the reason why it's not a guaranteed profit, you've got things like carrying costs and financing. Normally, futures are above spot, so that's contango, because holding metal costs money. You've got storage, you've got insurance, you've got financing. In backwardation, that negative carry might be outweighed by market demand for immediate delivery, but you can't always arbitrage it away unless you can borrow metal, then you've got to store it, and then you've got to deliver it. To execute a true arbitrage, you'd need access to physical silver and to the CME or COMEX warehouses, and you'd have to have delivery rights. Do you know, most traders can't actually take or make a delivery. So the theoretical arbitrage is not easily actionable. A few people have tried this, and despite having the cash, to execute the deal, they want to execute the warrant, it's somewhat of a closed shop. So they kind of don't want you in there. There's only certain people they actually want to be giving metal to delivered. The rest of it, they just want the COMEX, and that's what it was set up for, to be used for hedging prices. So basically, say you were what am I going to be? I'm going to be a farmer, and I want to know how much money I can spend next year. So I know what my crop's going to be roughly, but how much is it going to sell for? Well, I can lock my price in the futures. So if the price goes up, unlucky. If the price goes down, yay, well done me. But at least I know what I am going to be able to sell my produce for, which then allows me to budget for the following year. And that's what the COMEX was really set up for. It was never meant to be a delivery vehicle, really, for the commodities that are traded on there. But that's what it is. That's what's happening. And there could be trouble. There could be trouble ahead. So yeah, by the by, so you'd then have your bid-ask spreads and transaction costs. These can easily erase small price differences between the spot and futures, and there's a real risk of price convergence. Even though the futures converge to spot at expiry, this path, it can be real volatile. You can face margin calls or capital risk, in the meantime. And also, that can be imposed by the COMEX, like what has happened to silver. If the price starts going up, one of the mechanisms they use to try and slow it down or reverse the trend, get the price going down like they did with the Hunt brothers, they will with the Hunt brothers, they didn't increase the margins. They just said it was selling only on the COMEX. And as soon as that happened, the price just, took a nosedive. Hunt brothers went bankrupt pretty much, and it ruined them. I think that's the story anyway. But if you're interested, have a look. There's plenty of details about them. But so what the COMEX can do, they can increase margin requirements. So most people who trade on the COMEX will be using leverage. They'll increase the leverage requirements so that basically to hold your positions that you've currently got open, it will cost you more money. That means you may need to sell some of your positions to fund your existing positions or the positions that are left over. So it can be a tool that the COMEX have used, and they've used it before to good effect. However, they tried increasing the margin requirements on silver. Was it last week or the week before? And it had. a momentary, I think it was an hour, where there was a little bit of a sell-off. Made no difference. So whether they're going to try it again and they're going to increase the margin requirements again, who knows? What will they put it to? 100%? Doubt it. But I'm pretty sure they will try and increase the margin requirements again for silver positions. Now, when backwardation happens, by the way, backwardation often signals tight or near term, there's a supply shortage or there's strong demand for it now. What's the shortage going to be caused by? Who knows? I don't know. It could be anything. And we probably wouldn't get to know about it, or you wouldn't get to know about it in real time. You might hear about it a few days later, but by then, the issue's been resolved or the price has moved. And as they always say, the cure for high prices is high prices. But, if you were an industrial user or a refiner and you need that metal now, you're going to go to the COMEX and you're going to go to the spot market, which is, what is it, T plus one, I think? Obviously, I would never take delivery off the COMEX, so I don't know, is it T? So it's close of play and then delivered the next day. Well, there was an issue with London, wasn't there? Was that with I think it was with gold a few months ago, a good few months ago now, where they went something like T plus 8 weeks. It was crazy, and that signaled that there was a real shortage of gold for immediate delivery, which obviously then the price starts moving up, or it helps the price start moving up. I think it was already on its way by then. But so industrial users or refiners, if you were in backwardation, they want delivery and they want it now. They want it quickly for whatever reason. Investors are less interested in holding paper futures, for further out. It's just, it's not something that investors really are really into. It's bullish in the short term because backwardation, that is, because buyers are paying and they're prepared to pay a premium for immediate delivery. So when you get a contango, so the futures market is higher than spot, or you get backwardation, futures lower than spot, often the potential arbitrage doesn't compute. And that's because on paper it does, but it's because of the hidden costs. It would also never be risk-free. And that was the comment that I thought, risk-free, really? Even if you can manage to get the arbitrage, it's never going to be risk-free. And even if the paper, if it works on paper, the maths worked out, and you somehow were allowed to execute a warrant and request delivery, it's still not going to be risk-free. And let's be honest, it's never going to happen to the person, but it's just that lack of understanding to think that it actually is possible. There's a calculation you can use to evaluate, the theoretical fair futures prices for silver. You've got to use interest rates and storage costs, time to maturity, and all sorts of jazz. And I've done it in the past, and honestly, it's nothing more. It's an absolute ball ache for the amounts I invested. It just isn't worth it. If you're somebody who's going to be investing billions, and you've got that sort of financial clout behind you, then 0.5%, 1%, good on you. That's worth doing. But for me, no. I can't be doing with it. I have got, in fact, I'll try and find it now. There is a formula that you can use. It's to use the theoretical for futures price for silver. And you can see how big then, using that, just how big the backwardation really is. What it looks on paper is nothing like what it is in reality. And like I said, unless you're a pro with big money, don't bother. Really stay away with it. Stay away from it. For me, or for most of the people out there, go to your bullion dealer, find a bullion dealer who you like. There's plenty of good ones out there. Look at the reviews, genuine reviews, and once you find someone, you will build up a relationship. Let them have the heartache of here it is. Let me tell you. So the theoretical arbitrage, you need the theoretical futures price, the current spot price, the risk-free interest rate, that's annualized, storage costs, annualized as a percentage of spot, convenience yield, so the benefit of holding the metal now, time to maturity, that could be in years, and that's how it's worked out actually, in years. And that's all expressed in a continuous compounding form, so on and so on. Like I say, for me, tried it, done it, 0.5%, not worth doing. And it's still not guaranteed then, because you can get some real big movement that always has you on edge, can go against you. And yeah, I'd sooner go to a bullion dealer and buy my little silver Britannia. Quite happy with that. Make the profits on through trading and then turn it into a percentage of it into physical. Go and dig it in your garden or put it into a vault that you trust. Best way to do it. Just my opinion. I can't give legal advice. Do your own thing, but that's what I would do. That's what I do. Keep it somewhere safe in a vault. And yeah, that's the way to do it for me. So moving on, the next one I heard, why doesn't Elon Musk just go to the COMEX and buy all the silver? I get it. It makes sense in a way, but it's just naive. Or on whoever it is doesn't have an understanding of how the markets work and what have you. And to be honest, unless you're in the markets and you're trading, why would you? So I'm not laughing at the question. I'm just laughing at how difficult it is to do. And it shouldn't be as difficult as what the person's requesting, but it's definitely made so that, Rule 101, the little man will not make money. Firstly, you've got these big companies that rely on silver. And in my view, let's take Elon Musk. He's a good one. He's probably bypassing the COMEX silver anyway and going straight to the source, to purchase his metal before it even hits the CME, or the futures market. If he put an order in for however much he wanted, the price would just go up. And as soon as word gets out that Elon Musk is buying, obviously everyone jumps on the trade and the price starts going up, so he's paying more for his commodity than he needs to. Yeah, they're probably inelastic when you think about the total cost, but you don't want to be paying more than you have to. The other thing is, it wouldn't, if you go directly to a supplier, the supplier's probably not gonna be saying anything. So, the price on the COMEX there wouldn't be. Eventually, there would be a movement because the metal that's been taken directly from the producer isn't going into the COMEX vaults. So you're getting a shortage, or when you come to do your year-end figures of how much has actually gone into the vaults, production-wise, it's normally around 850 odd million ounces, is it, that they say goes into all of the ETFs and the COMEX and London, the LBME. We use way more than that, by the way, but I think this is something like the 5th year that will be in a deficit supply. Yeah. So, and the other reason, that's probably why they go to the producers. The other reason being, there are position limits on the COMEX, for the traders that are using that facility. This is why this current price surge in the spot silver price, it could have a pause or a little pullback soon. This rise, if you look at a chart, it's been pretty constant up and to the right, and it's getting a little bit prolonged now, and we could hit that point where there is no trader space left to buy, until the month changes or when the trader limits begin again. On the COMEX, if you didn't know, it's regulated by the CFTC. Yeah, I know. I think they've got one person now that's doing the job, but hey, they were never that good at it before. But yeah, and that's not happening at the minute because of the government shutdown. So yeah, but every trader and every trading category, so whether it's commercial, whether it's managed money, whether it's swap dealers and so on, well, they have maximum position limits for each contract month and overall across months. These limits apply to the futures. So say silver, December this year, December 25. And it also counts on the options as well on the futures. So they have limits. I think on silver, I'm going to go from memory now. I'm going to say it's 3. What was the limits I saw? I can't remember, so I'm not going to say. But they do have trader limits. I'm going to say 3,000 contracts. Don't know. But yeah, there's only so many that they can hold. These have been going back to 2000 and what was the year? What was the year? Was it 2011? I'm going to say, when JP Morgan was forced to take over Bear Stearns' short position on silver, which ultimately Bear Stearns went under. Yeah, JP Morgan were forced to take on their short position, and they were allowed to exceed the position limits. Yeah, I think it all went through. Part of it was through the house account and what have you, and I think that was part of the deal. They were allowed to exceed position limits if they took on Bear Stearns' short position. That was a rumour. Whether it was true or not, I don't think we'll ever truly know. It happened, that I don't think that's debatable. But the true size of the position, the true extent of what JP Morgan was allowed to do to get out of that position, and make no bones about it, JP Morgan traders and others were caught colluding to manipulate the price of spot silver and futures downwards. There was WhatsApp messages. They were fined over, I think it was 800 million, and I think the profit they made was $1 billion. So that's not bad, is it? Slap wrists, and you don't do it again. And by the way, you've got out of the position you were in, and you've made 200 million. I'd say that's a bit of a result. So these position limits, in theory now, they are enforced. And they're designed to stop any one person, say Elon Musk, or entity, or a class of trader even, from cornering a market or overly influencing a market. That's why these position limits are set. And that's why, like I said, Elon Musk couldn't go and say, right, I want to buy all your silver. He's got the money. But the silver market compared to the gold market is tiny. So, yeah, it's position limits that stop him being able to do that. The other thing is they can't legally add more longs until their existing positions are reduced or a new trading month cycle begins. It resets the limits. And that can cause liquidity to tighten, on the buy side as well. So there are, for every cause, there's sort of an effect. So even if, take silver now, even if the bullish momentum continues, new money can't enter this market easily. So this price now, it'll tend to pause. It'll have a little period of consolidation. It might even have a slight pullback. Looking at this up here now, it might have a pullback to, what do they try and get back to? They always like the 200-day moving average, don't they? Which is, what's that at? 47.50. So you'll have people saying if it pulls back to 47.50, it's over. That's the end of the bull market in silver. Gold will follow. Or it's silver's a dog. You will get people saying it, regardless of the move that it's had over this year, which has been fantastic, by the way. Nowhere near where it should be. Should be way, way higher. But like I said earlier, we've got to work within the system with the figures that they give us, with the manipulation. And I mean, don't get me wrong, sometimes they will manipulate these markets upwards as well. If the COMEX, they can see where people's or institutions or family offices, they can see where their stops are. And they will target these stops. They'll do liquidity sweeps. And they will literally target a specific price. So lots of shenanigans go on. And you can say that it's part of the circus. Is it moral? I don't think so. I think if you're running a book, just because you can see where, say a hedge fund, if they've got a stop in the market, say somebody has got a stop in the market at just below the 200-day moving average, so at 47.30. If they were going to target the 200-day moving average, 47.50, they will drive it lower and try and get that hedge fund stopped out. They've also done it, trying to get longs out of the market as well. And shorts, they will manipulate it either way. It's called a liquidity sweep. It's just what they do, and it's just one of them things we've got to put up with. Is it legal? Yeah. Is the way that they do it legal? Not always. You're not allowed to pull bids, which they've been caught doing before. They have RICO charges brought against them, JP Morgan, for doing just that. RICO charges in America, that is a serious charge. Does it stop them? No, not really. Traders have been sent to jail, probably some minions, just my opinion. Not the people who come up with the idea. But it's only a few weeks ago. Some of the guys who were put in jail, they've been released. So, is that right? Is it wrong? I don't have an opinion. I don't care. It's just one of them things. And yeah, that's what happened. So yeah, so if the market pulls back slightly or consolidates, it doesn't mean that this momentum is. If you want to speak about momentum or what is momentum, have a look for Michael Oliver. He's the momentum king in my book. He's done all the research in it for many, many years. And momentum is moving up and to the right, which, if you don't know what that means, it's a trading term for prices are going higher. So, yeah, you'll often see this consolidation or a slight pullback near the month end or just before the periods roll over, when traders switch from the front month, to the next month. So that is why you're pausing this market or a slight pullback. It's not negative. You'll see negative comments. It is not negative. It doesn't mean that momentum's changed. It's not changed to the downside. It's just kind of the system putting the brakes on. As things stand, because of the government shutdown, we're not getting the commitment of trader reports. The COT reports. That's what it stands for, commitment of traders. That gives us an insight into who's doing what. And so who's potentially going to be hitting the position limits. We're not getting to see that at the minute. But hopefully once the government shutdown gets resolved, they tried again earlier this evening in the UK and it failed, so the shutdown is still there. So we don't know. We're flying blind a little bit as to once we see the trader report, we can find out what is occurring and who's getting close to hitting the limits. It can kind of give you an indication that maybe a little pullback's on the way. But like I said, we're flying blind at the minute because of the shutdown. So I was thinking, what could be driving this current run in silver? Well, most of us who trade silver know about what its true value should be. You know, adjusted for inflation. I'm lowballing. I'll go with an estimate. I'll say 200 US dollars per troy ounce. And that's lowballing. You know, it's still not reached its 1980 price. It's almost there. It's almost there. And people say it's $50. Not quite. It wasn't quite. But that's where it was in 1980. Only there briefly, but it was at $50. Then we had the same again in 2011. I've spoke about that, why the price was allowed to run up. Then it was smashed down. A humongous liquidity sweep and all pre-planned. So I take that with a little bit of a pinch of salt. But from 1980 to now, I'm talking today, the 8th of October, 2025, not with the futures markets, but with the spot market, the cup has been completed. So if you don't know what a cup is, you normally get a cup and handle. That's where there's a price there. It goes down, 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 and then it'll come back up. Well, it took 45 years that cup to complete. Now we'll have a bit of a handle, which will go sideways. Then, once it goes past $50, there is no ceiling because it's never been there before. It's never been there. You, like I say, if I say $200 an ounce, you can work out what the inflation rate's been since 1980. So the price, if silver went to say $200 now, in real terms, that's still the same price as when it was $50 in 1980, because obviously you get, in theory, your 2% a year. Never works like that. But so if it goes to $200, that's literally where it was back in 1980. And how many commodities, how many sectors, the tech, everything's at record highs. You look at gold, performs fantastically well. And yet, silver's just struggling to reach its 1980 high, so it's completing that cup. So in theory, once we get past 50, there is no ceiling. And I hear comments, you know, once it's there, we don't know. The sky's the limit. It's going to the moon. It's going to be $10,000 an ounce. It could well do. It could well do. If the COMEX shuts down because they can't deliver, nobody knows what the price of silver is going to be. However, you can kind of measure these moves once it goes past that $50, because you'll get people will start using Fibonacci, so you can have a measured move on a Fibonacci scale. Excuse me. If you don't know what Fibonacci is, it's just something that is, it just works. It's seen in nature, it's seen in maths, and that's why the markets use it. So you can have it will give you certain targets, Fibonacci targets, and 100% move. That'd be nice if it went over. Even better. But don't think just because it breaks through 50 silver that nobody knows where the top is. It'll move on to Fibonacci, extended Fibonacci, and that's what people will run stops to. They will run taking profits to. So there's always something to take. You know, there's always something to place in that void once something gets to an all-time high and beyond. Silver has been. Do you know, silver's been suppressed 130 years. Been suppressed for 130 years. I'm going to go from memory now and say that it was used as a political pawn in I don't know. I'm going to say, let's say 1895. And one of the gambits that I can't think who the candidate was to become president, but it was to bring down the it was to bring down the gold-silver ratio. I'm going to say they wanted to bring it, it went to 30 to 1, I'm going to say, and they wanted to bring it back into 15 to 1. Something like that. So the point I'm trying to make is it's been suppressed since forever. So when that suppression finally ends and it goes to true market value, supply and demand, what price is it going to be? I don't know. Like I said, you can take a guess at $200 an ounce, but my guess is it's going to be much higher. We know it's 130 years of suppression or messing with the figures. We know that, but your hands are tied. If you want to deal in the commodities market, gold, silver, all you can do is go with the hand that you're dealt by the establishment and try and make a few shekels out of it. So we can go off if you think about supply and demand, we can go off the figures that they put out for solar use or electric vehicles, which, as Bix Weir always points out, they're nonsense. These figures, they change them retrospectively. So they'll say, I'm going to use silly numbers now, but just to prove a point. So they'll say over the year, we expect in solar power that 3 ounces will be used. They're thrifting, it's going to be 3 ounces. And then when the figures actually come in, they'll change it and they'll say, oh yeah, actually it was 10 ounces that was used. Well, that move, if that had been said earlier, before the silver usage, it's going to drive the price up. So it's just another tool that's used to suppress the price, suppress the demand, in theory, of silver. To retrospectively change your figures just shows it's cheating, basically, and it shows people are not stupid. They recognise when you change your figures and they point it out, and it just shows. Is it Metals Focus? I think it is. They put the figures out. Anything they put out, take with a pinch of salt. So if you take industrial metal usage over a year, for the last 5 years, we don't produce enough metal to supply industry. Now, I think annual output is something like 850 million ounces. We've been going way beyond that usage for the last 5 years, 6 years. And really, it's only the last, 12 months silver started to pick up a pace. But I think a lot of that's because shortages are starting to appear. And there's so many other uses for silver in industry. How many ounces are used in a cruise missile? I don't think anybody really knows, but it's a lot. It's a lot. It's more than you probably would think. It's used in the medical industry. Silver, bacteria it doesn't adhere to silver. That's why all the toffs, hundreds of years ago, they would always have silver service, silver cutlery, because it's hygienic. So there's so many usage. The photographic industry, doesn't use that as much now because of digital, but the usage in, how much did Kodak used to use? How much do they use now? Not as much, way less, but it's still a use. So this industrial demand for silver is huge. If you place silver then into its precious metal category, And it, along with gold, are the two true forms of money. Because, and you'll hear people say it, but it's true, they have no counterparty risk. Then once it goes into that category and starts growing in that category, then the demand for silver is going to be huge. Recycling of silver isn't a thing. It's just not profitable at current prices. People have tried it. It doesn't work. You know, they didn't last long in business. And it's said that in the future, the waste dumps are going to be the new silver mines. How many ounces of silver go into landfill? You know, must be lots. Nobody recycles what's in a washing machine, do they? Or what's in a mobile phone, or what's in a TV, or what's in a battery. We just don't recycle silver because it's just not cost effective. It's not cost effective to do so. So, yeah, if the public start moving into silver, that's going to drive the price sky high. And I've got a feeling that is what will break the bank, as the saying goes, probably literally as well. Industrial demand is already crucifying supply. But if you could almost see there being a ban on public purchases of silver, especially as it's been put on a list, hasn't it? But if the public start buying silver, then that's just going to exacerbate the problem. And it is a problem. It appears that London, the LBME, it's having physical shortages, and that is what is allegedly driving demand even higher. Silver was placed on, what was it placed on? I've heard it called a couple of things. Silver was placed on a critical minerals list, or a strategic metals list, or something like that, because they're starting to realise that there are shortages. And as soon as that happened, silver was always going to start going up, despite it being played down. Gold is rocketing for so many reasons. I couldn't go into all of them now, but when certain central banks now, they hold more gold bullion than treasury bonds, and that is a red flag for paper currencies globally. It always used to be they held a certain amount of gold, central banks, for what they would say is tradition. Yeah, right. And we're just opening up again. As you can see at the top right, it's 11 o'clock just in the UK now. So, bit of a widespread on the open. Yeah, it used to be bonds, treasuries, gilts, bunds, whatever. Central banks would hold, and they'd hold a certain amount of gold as well. Well, that now has crossed, and they are now holding more gold bullion than they are paper, which is not good for the US dollar, but not just the US dollar, paper currencies in general. It's not good. All the paper currencies throughout history have always gone to their intrinsic value, which is nil. And people going about the dollar now, initially the dollar was a weight. It wasn't a piece of paper that was a $50, $100, or whatever. A dollar was a weight. And I've got a feeling we are going to go back to solid currencies. Whether there's some kind of digitization attached to it, I don't know. But we need to go back to something that is going to one, get rid of debt, or unless they're just going to let the debt slide and bring in a new system. And buyer beware, if you've got debt, tough, who knows? Who knows what they'll bring in? But I would certainly. Somebody once said, I think it might have been Egon von Greyers, and he once said, it always stuck with me. People say about how much gold or silver you should own, and yeah, keep it safe, keep it in your vault, bury it in your garden, throw it over your boat in the lake, whatever they say. But he said, someone asked him, how much gold or silver should you own in your portfolio? And I think it was his answer where he said, you should own in gold or silver whatever you are not prepared to lose. And it always stuck with me that, money in the bank, yeah, it looks good, might make you feel secure, but how secure is that in the bank? Because bear this in mind, once you hand that money over to the bank, it is not yours. You become a creditor of that bank. And if you've got 85,000 and you're thinking, well, I'm covered, yes, you are, in theory. But the number of, if you're in the US, well, if you're in the UK, the number of pounds that are put to one side to cover the banks, should one of them go down with your money in it, it's not enough to cover. It's a tiny amount. It would never cover the losses. So the fact that you think you're covered for 85,000, yeah, good luck. If one goes down, you might be all right. Once they all start going, there's not enough money out there to cover it. And the other thing that people don't realise as well, just going off on a tangent slightly, if you are covered by 85,000 by your bank, and you are lucky enough to have 85,000 in another bank, just check that them two banks are not under the same umbrella. Because if they are, have a check to see how much you're actually covered for. I think you'll find you're only covered by 85,000 for the two banks. So you've got 85,000 at risk. So you need to make sure they are completely separate entities, nothing to do with each other. One bank that you hear and you look at the parent company and it's Barclays. Or you could have another one and it's part of the Halifax group. So, yeah, make sure they are completely separate entities. Then in theory, you're covered for both 85,000 amounts. Failing that, you could be in for a shock. So going back to silver, the other issue that is going to support silver is God's ratio. And this varies slightly depending on who you listen to. But these numbers are I think they're pretty accurate and within margin, shall we say. So to help silver go higher is the gold-silver ratio. You look at where gold is right now, and you look at the silver price, the gap of it's coming slightly lately, but the gold-silver ratio, it comes out of the ground at, I think some say 7-1, some say 8-1, some say 9-1. I'll say 7-1. It used to be set at a ratio, like I said earlier, I think it was in the US, at 15-1. And this was eased to 30-1. Then I think they wanted to bring it back in. And because that would have meant anyone who's holding silver, suddenly you'd almost doubled your wealth. It's been as high as when COVID was on. I think it went to 120 or 125, something like that, to 1. I think currently it's about 85-1. Between 80 and 90-1 is where it is currently. So let's say it goes to, what's its mean average over all that time? 50-1. And that's still historically, that might be the average, but it's high. It is still high. So if it goes to 50-1, the gold-silver ratio, and gold stays where it is, if gold keeps going up, the gold-silver ratio, if it came down to 50, blimey, if it went to 30, wow, silver is going higher and much higher. the runway is up and to the right, and I would say pretty steep as well. Just my opinion. You know, I can't give financial advice, but it's just my thoughts, and it's going up and to the right. I'm sure of it. The only thing I think that is slowing it down now, like I said, is position limits and maybe a little bit of numbers magic here and there behind the scenes, whether it's increasing margins or I'm not sure. Not sure. But it wouldn't surprise me. So like I said, I can't give financial advice, but I would never do that anyway. But yeah, you have to keep spare cash around to pay your bills. I understand that. But anything you don't want to use, get to your local bullion dealer. Stick it over in the lake, stick it in your garden, stick it in a vault. I'd be buying a few silver coins. I like my little Britannias. Like I say, don't store them at home unless you've got guard dogs, a howitzer outside. Because when the S hits the F, you don't want people breaking in, thinking you've got gallons of precious metals there when you haven't. So yeah, is it safe in a vault? Probably not. Would it? Well, yeah. Would it be safer if you could keep it at home? Probably, yeah. But then you don't want to make yourself a target. Personally, I think the risk of having it vaulted is slightly better, especially if you can get there quickly. So, but whatever suits you. But to leave money in the bank, if you've got money spare, that is, getting harder and harder, isn't it? That's for sure with inflation. But yeah, if you're leaving it in the bank, just be aware, it is not your money. You are a creditor to the bank. People want Bitcoin now, don't they? Silver's not sexy. Gold isn't sexy. Bitcoin is sexy. Nvidia is sexy. Honestly, each to their own. If you're in Nvidia, if you're in Bitcoin or XRP, Ripple, whatever floats your boat, best of luck to you. And I genuinely mean that. I don't understand cryptos enough. I just think if they are tied to fiat currencies, then they have fiat currency liability. So, like I said, I just don't get it. Maybe we go to a digital currency that's backed by or partially backed by precious metals, gold, silver, whatever. I could see that being tried, but I think even that's going to be doomed to fail. I think we go back to what's been around for 5,000 years. Gold and silver as solid money. You cannot just inflate. You can get rid of debt if you wanted to by increasing the prices, but that comes with its own problems as well. It's not just a case of let's revalue gold, let's revalue silver and keep the same monetary system and the debt has gone because we've inflated the value, the currency away through repricing precious metals. Within 5-10 years, politicians, they will have run up so much debt again because that's what they do. You will be back to square one. So I think they need something more substantial, something more achievable. We could talk tonight about the BRICS. That's something else that's going to get thrown into the mix. But that's maybe that's a video for another night. Or if you go and look at Andy Sheckman, he's done plenty of videos about the BRICS and what it stands for. It's basically going to be it's not a gold-backed currency at the moment. It's a gold-backed medium of exchange that can bypass the SWIFT system. So yeah, it has a definite use, and it could also get expanded to global currencies if it needed to be, and if everybody worked together. The chances of that happening, I can't see it personally. It might, not by choice anyway, it might end up being forced upon nations. But I think they would go kicking and screaming because they want to be able to spend money when they want. Let's be honest, in the UK is broke. it's only that square mile, the City of London, that is solvent, and that's why it's got its own police force. It's got all of its own things in that square mile. And if you look about how that came about, the square mile, and look at the history of money, there's so much. People don't understand what money is, how it works. It's crazy. They should start teaching these things at school, and they don't, because they just want people left in the dark. And is it wrong? Yeah, of course it's wrong. Will it change any time soon? Definitely not. Definitely not. So it's up to us to educate ourselves. And yeah. Other thing that I wanted to talk about, Shanghai, the Shanghai Metal Exchange in Shanghai, believe it or not. That opened again last night after it closed for, I think it was 8 days they were on holiday for? Or seven working days. You can see up just over, let me point to it, sorry about that. That was when Shanghai opened last night, and it was expected that when it closed, I think silver in Shanghai was at 42.70 or something like that. It's difficult to gauge it exactly because of the cross rates with the onshore renminbi. You know, the Chinese currency that's onshore, it has two currencies, one that it controls, one that's a little bit more fluid. But yeah, so when it came online last night, there was an expectation that the COMEX silver price could drop. To be honest, I was 50-50 on whether I was expecting it or not. And it did start to go. However, whoever is buying off the COMEX, is that London? I don't know, because like I said, we haven't got the commitment of trader report. They certainly came into the market, took full advantage, and it's gone up and to the right again today. Pretty much all day until after tea time-ish in the UK. Then as we've seen, it's just opened now. It's just been untouched. Can't see the colours on that from here. Is it the 20-day moving average or the 50? Might be the 50. Whether it's going to come down, like I said, to 47.50, just touch that. Just check base. Maybe the traders will clear some positions out, touching that 200-day moving average. But they know historically, as soon as it does that, the buyers are coming in again. Whether it'll get that low, I'm not too sure, because like I said, position limits could start becoming an issue. Whether they are already this month, I'm not too sure. I wouldn't have thought so yet, but once we get to the end of next week, it's going to be interesting. Hopefully we'll get the COT reports, but like I said, all the time the government shut down, we are not getting this information. So the last thing I wanted to talk about was a little bit of Forex pairs. There is, I'll try and show you it on here. I've got a little short on. I'm going to try and build actually, and it's the cross rate on the Forex. It's the US dollar with the yen. I've had, I don't know if you can see it. There's that red line there that's going all the way across. I've had that waiting and waiting for weeks and months, and I thought it's never gonna get there. But it's finally touched it. So it's at 153. So I've put a short on that. I'm not telling you to do it. I can't give financial advice, but I put a little short on it purely because the yen, there was always a yen trade, wasn't there? Because interest rates were low in Japan. So it used to be borrow in yen, pay the low interest, go and buy a different currency, buy a bond that paid a higher interest rate. It's a guaranteed profit. Very boring, you know, not overly exciting, but there was a guarantee. You could guarantee yourself, 3 or 4%, something like that, maybe a little bit higher if you were a little bit more, not as cautious. But you could kind of lock in that percentage, and that trade worked for goodness knows how many years. It's not been as good since the financial crisis in 2008 because obviously interest rates went low. Certain countries' interest rates went negative. But that that yen carry trade, it started to unwind once interest rates started going up, and it put real pressure on the dollar yen pair. Now, behind my head, I don't know if you can see it there. There was a jump on the open in that dollar yen cross, and that was because they've now got a new prime minister. Can't remember. I think it's a lady. I can't remember what she's called. But since then, the yen has been under pressure. But mark my words, they will do all they can and all they need to. They will defend that yen. At some point, I'm pretty sure that the Japanese will do whatever they're doing with rates. The central bank, of Japan, even if they just try and jawbone it a little bit, they'll try and bring it down to around the 140. I'm thinking whether they can get it to go a little bit further, maybe to 135. So that'll be a nice little move there. So I'm hoping that one comes off. The plus side of that, if you're a silver bug, that'll probably, in fact, not probably, it will. That'll put pressure back onto the US dollar, which will probably bring the dollar down a little bit again, maybe to 96, something like that. If the pound strengthens once it stops buying silver, because if they are buying silver, they're going to be needing dollars. I've got a feeling that if those two instances combine, maybe the slackening off in the LBME buying silver could be counteracted by a lower dollar price, which ultimately is positive for this runway to continue for silver. So like I said, in my view, and it's not rocket science, all roads lead up and to the right for silver, which is higher prices. At what pace, I don't know. People will guess. People can use, like I say, Fibonacci extensions. That can give you an idea. Timing-wise, who knows? Will there be pullbacks? Yes, there will. Will they try and shake people out of the market? Weak hands, people who are leveraged to the hilt? Of course they will. Liquidity sweeps will happen. But if you can stay in there are good profits to be made in this silver market. A bull market is called a bull market for a reason. Yes, it will go up, but a bull, it will try and shake you out at every opportunity. So be aware. I certainly won't be over leveraging, that is for sure. And all I can say is I wish you all the best. That's all for tonight, really. Well, that didn't turn out as quick as I thought. Normally, like I said, we do the sport. But seeing as there was nothing tonight, I thought I'd just give you a little bit of an insight into what's going on in Jimmy James's head, what's going on at work. And hopefully you've enjoyed this video. We will be back I will be back on Saturday, like I said. Viswa Krakow, we have got a friendly match, so we'll be covering that, assuming we can get footage. But we'll definitely be back Saturday because it is the Rugby League. It's the grand final, OKR against the mighty Wigan Warriors. Can Wigan will be there 3 seasons in a row now. OKR are looking good though. They won the league, didn't they, OKR? Are they looking good? Yeah, they are. Can Wigan beat them? Yes, they can. Is it going to be a good game? Oh, I expect so. It's going to be a bruising encounter. So join us for that one. If you haven't done so already, please hit that subscribe button, ping that notifications bell. If you can give us a thumbs up, that'll be superb. If you've joined late to the video or you missed it at the start, if you can please subscribe. I need more subscribers because the Polish Premier League, the Ekstraklasa, they have said once the platform grows, we can collaborate with them and they will give us the chance to live stream the Polish Premier League matches here on Catch It Live First. So, yeah, if you can subscribe, I would be ever so grateful. All that's left for me to say is enjoy the rest of your Wednesday evening. There's not much of it left now in the UK. I'll be back on Saturday, probably. If not before, I mean by that. We might have a Viswa Cracker update video on a few things that have been going on. Keep your eye out for that one. And all that's left for me to say is, if you're interested in this kind of stuff, have a look online. Bix Weir, Andy Sheckman, Alistair McLeod, Bill Holter, Arcadia Economics. There's so many. There's so many. And yeah, try and educate yourself a little bit. It could pay dividends for you and it could keep you safe in the future. Save you a lot of heartache. I am Jimmy James. Thanks for listening to me. I will be back real soon.